Hey, good morning. It's me again. That crazy Gann SUNSPOT cycle. The banks are corrupting the market and know what dates and times they're going to do stuff guy. And I want to talk to you a little bit about what's happening over here today. Today is December 7th, 2017. Now, I want to talk about this idea of cycles. And this particular indicator, the one that I've developed for people, is based off of the sun. It kind of blows people's minds. They either believe it or they don't. Whatever you believe, the sun has an effect on our environment. It heats and cools our planet, but that same energy also affects people's moods. And so we live on this wonderful little blue marble called Earth. And when the sun is more active, it's hurling radiation towards us. And we have this wonderful little shield called the ionosphere. And when that radiation hits our ionosphere, it excites these positively and negatively charged fields that are based on the same principle when you rub a balloon on your hair. And believe it or not, that change in the density of the electric and magnetic field affects people's moods. Okay? If you want to do just the briefest of research, we can go online and see that the places that receive the least amount of daylight and the least amount of that radiation, you could go Alaska, depression, suicide rates, no sun. And you'll see that there are a plethora of articles that describe how when we're not irradiated by that life-giving energy, the same energy that provides vitamin D, right? It's directly linked to our health. And when those things are gone, it affects our moods. And so trading, if nothing, is a study of the psychology of herds, a bunch of people together who feel the same way. I am excited, let's buy something. Yeah, I don't feel so good. Why are we so high? I'm really overextended. We should sell. Yeah. So I got together an idea and said, let's find the exact days of the peaks and the valleys. Let's find the exact starting points of each of these two cycles. It's not easy to do that. Really hard. I don't even recommend you try because it's an obsession. But once you find those dates, you can actually project the little ripples out forward into the future. And that's what this indicator is doing for me. It's allowing me to project those ripples out into the future. If you look at what's happening individually, you have big ripples, small ripples, and even smaller ripples. The last big positively charged ripple was back over here. Okay, and we'll just reinforce that with a monstrously thick circle right there. And just to really drive the point home, we'll make it green. Well, the next negatively charged ripple is up here. That's a big one. And this one is the reason for the video today. Because when I made the last video, I had the title, it was very ominous, Standing at the Edge of the Abyss. This is an important place. This is a place that we need to study and focus on. Because this is a point in time where, according to the cycle, that energy, that positively charged energy, should start to wane and disappear. People should be at that point of, holy crap, what have we done? And be less prone, less apt to purchase, and more paranoid and adverse to purchasing than they used to be. When we first got to this date, I want you to see that the market stopped here like it was supposed to. Things were starting to fall apart. And they were. For 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days, for 2 weeks, we came back to the closing price of the precipice date over here on the 31st of October. And we were here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days touching that price. And then somebody said tax reform. And it went, woo! And there's only one other negatively charged cycle since 2014, a big cycle. There's only one other place that it ran up like that and didn't fall apart. There's only one. I know because I'm obsessed with this stuff, and I looked for it. It happens to be the last solar peak. Now, take a look with me right here. And you'll see that the last time we had a solar peak, the market ran up to it, and it was the high. There's the closing price of the solar peak day. And now we have this triple wave pattern. A push up, suppression. A push up, suppression. A final push up, and then a return again to the closing price, and a push back down. How far down did it go? Ready? 100% of the original push up. Well, that bears a haunting resemblance to what's going on over here right now. Let me show you what I mean. So this is the same rectangle, the same height, the same width as the solar peak high that we just looked at over here. I took a screenshot, right? Now, look at the geometry of it. There's the first wave. The bank's going, hey, let's go higher. Okay. And then the stereotypical drop down. It's perfect, right? Then the banks drive it up again. And here's where the second wave should have taken us back down to this level, back down to 573. But somebody said, tax reform! Oh! And they tried to go down. The markets wanted to go down. That negatively charged ripple is here. People are like, I don't feel so good, but my broker says tax reform! And it's suppressed. You see that suppression here? You can see by the wicks, you can see by the candles where the closes are, that this area here at 2600, we just stop. And we pause. And then this thing. This crazy thing. Now, the height of this rectangle is the same height as the solar peak rectangle on the left. It's exact same height, $51. Now, I copied and pasted this rectangle, in fact, from over here. I want you to see where we're obsessed with right now, and where we've come back to now once, twice, 3 times, 4 times, the height of this rectangle. This is as far as we should go. The market has memory built into it. These ripples, these time cycles, they come with memory. And so we're at this point, this sort of decision point in the process. This is a very important decision point because according to this, if these two cycles are identical, we should come all the way back down to 72.50 and then all the way back down to 525. Okay? Now here's the problem. The problem is this date landed on one of those positively charged ripple lines. The date landed on one of the lines where in the past, you see where all those green dots are? Every time we land on a green dot that's not the high, I want you to see what tends to happen. the market goes which direction? That's right. Ding! Going up. So there, in my mind, today's sort of the kind of important day. Today is an important day. Historically, we would see a bullishly charged environment. That positively charged ripple would drive prices up. But the fact that we're sitting on the date of this ripple effect, of this candle, it's sort of confusing to me. So I'm watching for bullish behavior today. I'm trying not to be a counter trend, pick the high kind of guy. I am, however, watching for a breach of this low here at 620, because of two things. Number one, if this is in fact a positively charged day, we should not see this low. It should come right back up into the highs, go back up into 660, 670, 675. If we trickle down below that level, I want to explain why I think that's important. In our past studies, we've encountered a signal that I've included in the guidebook that I give out called a canaveral signal. And historically, when we see a buying pressure or positively charged ripple time, and that candle is fully eclipsed by a brand new high candle, sort of like an engulfing candle here, the market tends to revert and go in the other direction. Well, we're sort of seeing that right here. Here's that brand new high candle. The low of it is here, the high of it is here, and as of right now, the candle today is still in here. Okay, so everything about this so far, two pieces of the pie, have bearish connotations to it. So I'm not trying to call highs in this crazy uptrend market, but I am stating that there's a bearish, double bearish thing going on here today. The fact that we're on the exact end of the rectangle and that we're on one of these timelines, and the pattern as it's appearing historically is a pattern 7, which is a negatively which has an inverted polarity or a negative reversal back down. So watch for the break of that low at 620. That's all I got. If you like these videos, if you're following along, if you have comments on it, your own ideas about what's happening here, you follow time cycles, please comment, like, and subscribe down below. It helps other people find what we're trying to get out to you. And if you want to know more about our stuff intraday and how you can know when these turning times are coming more precisely during the actual day, you can visit us at www.backtothefuturetrading.com. Thanks, everyone. We'll watch and see what happens. It's going to be interesting. Whatever happens, it's going to be big. Watch for that low. Watch for the pierce of it. And I'm looking for a move back down into the 70s and then back down below into the 525s.